Hello traders, you're welcome back to the Forex Geek channel. In this channel, we break down powerful trading strategies to help you make smarter decisions. In this video, we are going to be talking about the unbalanced volume and the accumulation distribution indicator. We're just going to be comparing both of them. All right. Which one should you use? Which one gives better insight into price trends? By the end of this video, you know exactly how they work, their key differences, and how to use them effectively in your trading strategy. Okay, before we get started, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss another trading breakdown. Okay, now let us jump into it. First of all, let us talk about the unbalanced volume. Okay, I'm going to be adding the unbalanced volume to the chart right away. All right, so this is the unbalanced volume, the OBV. All right, this indicator was developed by Joseph Granville and is one of the most popular volume-based indicators used in technical analysis. Now, here is how it works. When the price closes higher than the previous day, right? When the price closes higher than the previous day, that day's volume is added to the OBV total. And when the price closes lower, that day's volume is subtracted from the OBV total. Okay, so OBV helps traders measure buying and selling pressure behind price movements. If OBV is rising while price is increasing, it confirms a strong uptrend. But if OBV is falling while price moves higher, it could be a sign of weak momentum and a potential reversal. All right. Now, a lot of traders use OBV to confirm trend strength and detect early signs of market shift. But what about the accumulation distribution? Let us break it down. All right, so let me add the accumulation distribution indicator to the chart. Okay, so here we have the accumulation distribution. Okay, now this indicator was created by Mark Chaikin and works differently from the OBV because it considers both price movement and volume flow together. Now, instead of just adding or subtracting volume, the AD, which is the accumulation distribution indicator, it looks at where the price closes within its range for the day. If the price closes near the high of the day, it suggests accumulation or buying pressure, right? That is if the price closes close to the high of the day. For example, like what we can see here. Remember that each candle has open, high, low, close, right? The open price is where the candle opens. The high is the highest point for that candle. The low is the lowest point for that candle, and the close is the closing price for that candle. So when price closes near the high, like what we can see here, when the price closes near the high of the day, it suggests accumulation or buying pressure. But if it closes near the low, if price closes near the low, like what we can see happen here, it suggests distribution or selling pressure. Now, if the AD line is rising, it means strong buying pressure, confirming an uptrend. If the AD line is falling, it means selling pressure is increasing, signaling potential weakness in price action. Now, a key advantage of AD is that it helps traders spot smart money activity, whether big players are accumulating or distributing an asset. But is it better than OBV? Let us compare them side by side. All right. Now, let us compare the OBV versus the AD and figure out which one works best in different market conditions. Okay, you can use the OBV. You can use the OBV when you need a simple volume-based trend confirmation tool. All right. Also, you can use the OBV when you trade in strong trending markets where volume plays a key role. Also, you can use the OBV when you want to spot divergences early to predict potential reversals. All right. Now, concerning the AD, you can use the AD when you want a more detailed look at price and volume flow. You can also use the AD when you trade ranging or choppy markets where price positioning matters. All right. Finally, you can use the AD when you want to detect accumulation and distribution by institutional players. All right. So which one is better? The truth is, both indicators have their strengths. Some traders prefer OBV for simpler trend confirmation, while others rely on AD to identify smart money movements. But here's a pro tip. Using them together can even give stronger signals. All right? So when both indicators agree, meaning the OBV and the AD are both pointing in the same direction, like what we can see happen around here. Can you see this extreme level? Right? And can you see this extreme level as well? And can you see the downside prediction? Can you see that? You can see that right about that point, can you see that we actually had a decline eventually, and that was quite a significant decline. Okay, so basically when both indicators are giving you the same signal, it's, improves the accuracy, or rather it could improve the accuracy and filter out false signals. Okay, giving you confidence in the trend. All right. Now, in addition to that, ensure that you always observe good risk to reward ratio, good risk management strategies, and do not trade with an amount that you cannot afford to lose. All right. Do not risk more than 1 to 2% of your account balance in a single trade. It's important. Okay. So there you have it, the unbalanced volume versus the accumulation distribution. Now you know the key differences, when to use each, and how to combine them for better trade signals. Which indicator do you use more, the OBV or the AD? Let me know in the comments. And before you go, don't forget to smash that like button, subscribe to the channel, and turn on notifications so you never miss another trading breakdown. Thank you for watching, and I will see you in the next video. Happy trading.